Good morning. Everybody knows what happened last week. The rate cuts are not so much of a sure thing. The CME side still saying just under 50%. We'll see as time goes on. But clearly there was a little bit of a shock to those words that created this giant wide range bar. I think the worst of it here shown in the Dow. Things were recovering impressively after that gap down on Tuesday, and then Wednesday things began to move up, and this was the weaker one. I think the S&P looked a heck of a lot better, and the Qs looked a heck of a lot better, moving up there. And I was like, oh wow, is this possibly going to move up to new all-time highs? Going to get through those two pivots there? And it was right here. Yeah, I mean that was it was above the opening price. It dipped into support. It recovered as it should in a bullish scenario. Gap up like that, gapping above this resistance. And then it was, I forget what name is. I think unless I saw same guy, Kashari was talking at 7 o'clock this morning. I guess they told him to shut your mouth. Things are pretty benign here. But this is what happened after he spoke, and things just fell like the proverbial rock off the building there, and didn't bounce until Friday. And we got that little bit of a bounce. Prices came up to minor resistance and stalled there. And, right now things are just kind of hanging out a little bit above there. So we'll see where things go. At this point, we've got a trading range in place, the high there, and the Dow already down on top of major support, cutting through the 20 MA, the 50 MA. And most of these indices, it's hard to see because I've got green moving average, the 50, and the green candle there, but they just tweaked above the 50 MA into the close on Friday. So odds are, with a pattern like this, news coming out on Wednesday, the CPI, inflation, and so on, really isn't too much today. Consumer inflation expectations at 11 o'clock. We'll see, if that moves things around. So just making you aware at 11 o'clock that will come out. And then there's some auctions. Actually, this guy's talking at 7 o'clock tonight, not 7 o'clock this morning, 7 o'clock tonight. And then Tuesday, there's some more auctions, and Wednesday is the big day. And FOMC minutes. So then jobless claims on Thursday. So the end of the week is where the action is likely to pick up in either direction. Right now we're in a trading range. And so bottom of the range, buyers come in. The wide range bar, we'll see if prices can move into that area, possibly get above, if things going to break below. So not a great scenario here. Yeah, I look, not too many things reporting earnings. I could look and see what it is, but it really picks up next week, a little bit this week. So we'll see how that begins to play out. Some banks, which have been doing well, so it could be movers. You would figure they're going to be good. They should be good. Transports in the middle of the range, just wide, whippy mess, going nowhere. 20, 50 MA, right in the middle of the range, price in the middle of the range, and not too much going on there. Neutral. S&Ps. Let's go with the spiders first here. So relative strength compared to the Dow, well above major support. It stopped. Why did it stop there? It cut through that support, which wasn't significant. Surprisingly, it didn't get all the way down there because the market closed. Bit of a recovery. Trading range, same thing. And with a wide range bar like that, clearly breaking Friday's low is going to send it down to this major support in the rising 50 MA. Good thing is there is a significant amount of support there, which theoretically would limit the downside unless, this is going sideways. And then on Wednesday, the news comes out and it's not favorable. It could potentially cut through that. And then there's an unfilled gap down here. And that's why I've got this marked void risk. This is little to nothing to stop it from coming down to the next level. For now, we'll just assume that we're going to be stuck in a range here back and forth while we wait for more news to come out. SPX. Bottom of the bar, top of the bar. We're in the middle of the bar. I'm scrolling that over. 51.45, 52.50. I like 52.50 just because of the wide range bar, power bar. It already had its retracement. It's hanging out here. It's a middle number, 52.50. If the markets inch up, should be able to get a little bit more, which is what we've been looking each day. Let's see, option chain. Let's see if it moved a little bit. No, well, it looks like it'll probably be 52.55 if the market continues to inch up. So I think above, to get 52.50 is good, but 52.55, and it'll be as close to a no-brainer as you're going to get, with nothing of significance happening here today. Transports we looked at. And, tech has been lagging. It's been going sideways longer. Interest rates moving up. It held the 50 MA, came up to the 20, sideways, same story. Where's it gapping up to? Inside bar. So Friday was an inside day. So far this morning, today starts as an inside day. It does have room to go up into this area. So that's what we call the wide range bar. The weakest link, it's a power bar. It suggests lower, but it leaves little overhead resistance because of the way prices came down. And it's clearer to see on the 15-minute here, just the waterfall decline and just nothing to trade against to say, if you're long, I'll sell at such and such because there's a pivot high there or there's a sideways consolidation. So now there's nothing there. Those looking at maybe trader pivot lines on the futures or Fibonacci lines or more subjective types of information. In any event, when it comes up to whatever it's going to be, even a whole number, it'll form a pivot. And then at some point you see here, it's getting close to that pivot. So this, what we called creating resistance, created this pivot. So now there is something to trade against where there was nothing there on Friday. So coming up into that area today, which it's inching up toward, you can see where my cursor is on the 15-minute chart. Will it make a lower high? Will it get up there? It can make a slightly higher high and then roll back over again. So again, in the middle of nowhere, so to speak here, and we'll see how it unfolds, as the markets open up. IWM. Moving up, trading range, top of the range, bottom of the range, in the middle of the range, under the 20 MA there. Actually, slightly in line, maybe a little bit above the 20 MA in the middle of the wide range bar. You can see where my cursor is on the lower right-hand chart. That's the overnight. And then you can see it's right at that pivot high on the 15-minute chart, the one to the left. It's trading range. You can see the weekly chart. Breakout, wide range bar down, bottom of the range. Just running in place. Keep it in perspective. And futures, not going to see much difference here, but you can see the advance, up at the pivot there, going nowhere, slop. These are just the kind of patterns you just stay away from. You can trade these things in intraday at certain points for day trades, but as far as the daily chart goes, this is a good example of just stay away from it. Does this turn into a red bar today? Does it go sideways for a few days? Does it begin to form, like a head and shoulders kind of a top. I don't know what this thing's going to do. So let's just stay away from it. This is a smart thing. Here we've got an M type of a top. You can see, well, this isn't climactic because it came out of a sideways consolidation. Here the wider consolidation is now turned into a wider consolidation with a breakout and a retest and a failure and back down to the bottom of the range. And so the same story, no matter where we look, it's all the same story. So as I said, put it in perspective and don't get chopped up. Trade other things that look cleaner, you know, patterns that show a direction that are much clearer. All right. So we've got Bitcoin up nicely today, up at the top of the range. Let's duplicate that. Coming up to the top of the range there. You see trading ranges, but not in gold. New all-time highs. Came out of a nice long consolidation. Yes, it is extended at this point. Got a wide range bar. It's probably going to consolidate. It's probably wait for Wednesday as well to see what the news might be. But you can see that long consolidation. We were talking about this chop here for the longest amount of time. Silver broke out of the top of the range. So these are signaling that they should go higher. And I see there's another part of the range there, which is at $30, a whole number. So probably going to stall, short term extended, a little far from the 20 MA. I got to chop around a bit. Crude oil, taking a little bit of a breather, but that looks like it's going higher. Look at that dip up. Look at that. Buyers are there on the dip. It's going to go higher. And with that going higher, those rate cut beliefs, I think, begin to diminish further and further. Unfortunately, we jokingly talked about the golden cross last week as we were talking moving averages and the 50 MA pushing up through the 20 MA. And because probably no one in the media or they're going to get on the TV wants to talk about the potential for no rate cuts, they're not going to talk about this golden cross, which is subjective, but they tend to do that when it's the S&P 500 or the Dow, or point out that cross of the 50 above the 200. Something we reviewed in the letter over the weekend, dollar rising, the 10-year, which we haven't looked at yet, that closed near the high of the week and above that pivot. It's got room to go up. Or we'll be watching to see if it does. There's gold, there's commodities, there's agriculture, there's gasoline, the red line, and oil. None of this is good news, unfortunately. And I had a little bit of a wake up moment here watching the news this morning. Dan and I live in South Florida, and I didn't watch the news shows on Sunday. I don't know if you caught that, Dan, where Maria talking to the governor, and they said that Biden or his puppet handlers pulling the strings are giving illegals documentation to come into the country and flying them in here. And they've brought thousands into South Florida, into Miami, flying into Miami airport. It's crazy. It's really crazy what's happening. Really crazy. Anyway, yeah. Mid caps, which we don't look at every day, but trading range. The good thing is the weekly charts, the monthly charts, many of them, the weekly charts primarily are up. We got a red bar, big deal. You got a red bar. It's in an uptrend. At some point, all markets correct. And you can see the topping pattern here as well. on the hourly chart. How much they correct is an unknown, but look, if interest rates continue to push up, the dollar continues to push up, all those inflation concerns could begin to push up, and we've got so much built into beliefs of 6 cuts, 3 cuts, 1 cut, whatever. That disappointment, you know, could bring things down possibly more than what would be expected just based on these strong trends. That's the unknown. We'll just see how it plays out. Semiconductors, weakening here. Sideways, been holding up relatively well, but still the same nasty wide range bar there. Chase, I did show SPX. There's your strikes. I said if the markets continue to move up into the open, 52.55, getting slightly above that bar or in alignment with that bar right there, the top of the wide range bar. Probably do either, these top and bottom strikes. So other than this day, no strikes have been hit. On this day, we just had to know better to get the hell out of the way. So there you have it. Financials, they always lead off with earnings, but same wide range bar, topping pattern. It's on, minor support. And so, those reports come out, maybe they can regain the wide range bar. Who knows? We don't know. We don't have a clearly defined trend, meaning at this point, we could say this is going sideways because of the depth of retracement, but it could recover. So we really don't have much of an advantage here other than seeing there's lots of 1, 2, 3 continuation patterns in stocks that are weaker than the financials that are broken down of larger topping patterns, and those trading under, this 2 bars there suggest lower prices. So they provide trading opportunities. We don't have to trade these markets. Regionals flip-flopping back and forth. You can see they're up here a little bit, no big deal. Retail that was holding up really well, that came in hard, stopped at the 50 MA. So damage has been done everywhere, except where we might want to see it, just wanting the rate cuts. No damage in oil, no damage in gold, none in silver, none in commodities. So it is what it is, and we'll just see how it all unfolds here in the coming days. But right now, Bitcoin's up, so some Bitcoin related instruments probably could be the way to go today for intraday. All yours, Dan.
Good morning. What you just said there it would be a good video title. There's been damage done everywhere except where you don't want to see it. That's a good title.
Except where you want to see it.
Right.
Yeah.
All right. So despite the broader markets being a mess, there, switched over. That I was surprised. We found many compelling patterns in individual stocks. Despite, this being a mess, I wouldn't trade this, as Greg said, except for day trades. But under these lows, we're going to have a shorting party this week. And that was exactly our bias on Thursday. So we said, I'll say it again, 100% bearish bias. We're expecting a bounce. Our retracement rules is we want it to stay in the lower 50%, kind of exceeded that. So are we going to get another inside bar or two? Based on what I see right now, that will be my guess. Monday and Tuesday, we get 2 more inside bars. And then I think on the CP, we got CPI Wednesday, PPI Thursday. That then the 2 scenarios are going to play out, we're going to get the nasty fall, 1, 2, 3 party, or we'll start getting the mix of another red bar ignored, even though that's hard to believe. All right, so I'll go through as many of these as I can in the next 8 minutes. But up alarms, hua here. We're going to enter this as a core long ascending. This is both. This is many names. It's a wide range bar breakout. It's an ascending triangle. It's an inverse head and shoulders. It's all three of those patterns on the daily. It's a continuation breakout on the weekly. It's a breakout of a bottoming pattern on the monthly. So old hua looks great. Moss looks fantastic. I was watching this all week long. And in fact, I remember saying this last Monday morning. 100% retracement. I said, let's see if it can bobble around here and give us bullish price action at resistance. It's exactly what it did, plus closing breakout on Friday. So that looks fantastic as a bottoming pattern. PVH was one of these earnings. I noticed this in Barron's, but it was on my list anyway. I didn't know that this made the Calvin Klein underwear stuff or whatever. There was an article about it also being overdone, but this was another beautiful end of day base. The gap's messing it up for a day trade or swing, but I posted it as a put spread. But it was on my list here for a beautiful day trade. But you need a pullback now. I'll put it on the bottom right. And then Netflix alarm. That is incredible strong red bar ignored breakout. So I posted this as a put spread, but it's also on my list as a directional. I just wanted to watch the broader markets more, but that's bullish as can be. Meta's bullish as can be, but it's up 4 bars. So I don't swing trade patterns like that. LIFW, it's a bottoming pattern. It's fine. Russell, it's up a couple bars, but it's a bullish price action. Day trade, your stop would be under this 15-minute base. Swing trade, Friday's low. Yeah, Bitcoin's ripping here. So yeah, we'll scan all the. Well, there's not, we can trade the Bitcoin ETFs, but they pretty much look alike for obvious reasons. And these little miners, I looked at them. There's no good patterns. There's just no swing patterns. All right, Mr. Gapping up, but this one has crazy high call prices. So you know what I'm going to do? Set an alarm at 1550 to see what it looks like, and I'll check the calls at that point in time. I just had a Zoom alarm go off. Look at this. This is what we call a continuation breakdown. Target these prior lows. But look, it's collapsing here pre-market for some reason. Really, Jeff? That's interesting. And then also talking about Zoom, ZI. Hey, John, this stock, the pattern, daily, weekly, monthly, well, not monthly per se, but it reminds me of Starbucks. Remember right here, you flag Starbucks. There's a breakdown, daily, weekly, monthly. And I said, please, 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 please go sideways here on support a couple more days, and then we can do the kerplunk. Yeah, this one, it's bounced here, but the fact that it gave up all of the strength of this bar and it has a void down to here. So, like I said, I need a couple more bars of weakness. Um, Look at this, has to be a buyout, ripping like that and going flatlined air C. Look at UCAR. Look at this little guy, 780. So that is a pro gap. Um, so I have that in this middle chart, 5-minute time frame. Let's see what it does, but that looks fantastic. But percent wise, that's massive percent. So I'm not going to rush into it. Look at this one, AUDC. This one's run too much. But look, $1.43 to 4.12. See that one's excessive. So I have no interest in that. Here's another gapper. I don't like the way it trades though at all. This has the footprint of a pump and dumper. Every time they send out a press release, pumps it up, and bam, slam it right back down. But it's a bullish gap, nevertheless. We were talking about donut last week, right? Oh, okay, this one's KKD. Shoot, what's the competitor? Duncan, DK. Okay, so it is. All right. All right, all right. I was in my head, I was thinking DraftKings. Is this what is DKNG? Yeah, this is DraftKings. What's the symbol for dunking? Or is it private? Okay. All right. So that ruined that idea. But nevertheless, let's keep this on our watch list, daily, weekly, monthly. Dunking, DraftKings, trip down a lot. Ideally, we get one more push down, and then I'll look for a turn. Knee was in a Barron's article. Now it's the month's not over, of course, but the monthly is a double bottom with a potent reversal. So that looks higher. BEP, why am I looking at you? You're bearish all time frames though. And I think these were at a Barron's too for some reason. Yo, I think they got positive mention. But it's a bearish chart. EFC, look, this looks horrible. Thursday was your continuation bar. Look, daily, weekly, monthly are all in nasty downtrends here. Looks horrible. So I would say 30-minute low on that. Carnival got a positive Barron's article. I looked at it and they got cousins, but there's no good patterns. All right, gold up alarm. We're in this in the ETF letter. We have a half lot. We actually sold a half lot into this strength and should have got back on board. All right, CME alarm. CME I gave as a call spread. So that's good to go if filled. Let's see who was it doing. Who will pull back, let's pull back to 5 is fine on who. There's no reason to wait for Yeah, and Netflix, we gave a put spread. Let me look at it. Okay, 30-minute high. I would like as a directional. So let's keep an eye on that. Hey, our Apple cart. Do we really think the Qs are going to stay strong with this thing getting beat up the smithereens? This is a descending triangle. Apple alarm just went off. YMM alarm. All right, Apple, we're shorting the stock or buying the 170 puts. $170 puts. Okay, so that would be triggered. No, I didn't know you were in, Duncan. TMO alarm. That sounds like a Sam I am trade. Busy like always. Monday mornings.
Reddit is strong today.
My alarm went off. Yeah. Remember, that's the one I wanted to do a put spread. Yeah, my alarm popped. I'm just not caught up yet. All right, IDXX alarm, Sam, this was yours, I remember. Bear 123. So it could be a good day trade to start. I think target 200. I was concerned about the reward to risk as a swing though, but you got nice weekly closing breakdown too, so that looks good. YMM triggered, clean trigger long. And we also have an Apple call spread. We had an unusual amount of trades this weekend, long and short. There were a lot of good patterns. All right, 172 Apple. Okay, at 172, 175. Okay, it's fallen 50 cents already from entry. And I said do it at 40 cents. So I do not know if this got filled or not. Can any of you option traders tell me if that got filled? HIG, yeah, strong as can be. All right, CME is a call spread. 215.